you about it. I'll tell you some funny stories that happened to me. But the key to the whole thing is to be successful in this industry and be successful as a good trader. You need to have, obviously, the right tools, which a lot of you do have, and that's the Lightspeed product. But once again, you need to know how to control greed and control fear. So we're going to talk about those topics. So let me just change the slide here. Once again, there we go. Okay. Well, obviously, the C2, the Cybertrade University risk disclosure. I know Mike had one for Lightspeed, and we also have our same. So to find out more, visit our homepage or our website. But just always keep in mind that there is a very high risk in trading, and just make sure you know what you're doing before you do it. Okay. So anyway, moving forward, ladies and gentlemen, a couple of things we're going to learn. We're going to talk about level 2. We're going to talk about the total view. We're going to talk about the best times to trade, read the charts, and we're also going to talk about some trades that happened today. But most importantly, we're going to talk about the discipline part, because that, I think, is one of the hard things that people have that's going to take the time to learn. Now, regardless about discipline, let me just tell you some of the things that I've learned and I've seen over the years. Now, I've trained, I could say, over hundreds of thousands of people in my lifetime. I mean, I've been doing this since 1995. I started the first school in the industry, and I've seen my share of very successful traders. I've seen some superheroes traders, and I've seen superheroes blow themselves up, because the reason how they became a superhero trader is because they just constantly were going deep into trades and not knowing when to call it quits. So these are some of the things that you need to understand to move forward with this. Now, one thing I can explain to you, hold on, let me just change the slide here. There we go. Okay. One thing I like to cover and talk about specifically is going into a trade. One thing I always like to teach and educate my students is trading. I never look at a trade of how much money I could win. I always look at a trade how much I could lose. And I know that's the opposite what most of you look at, but let's think about this for a second. When you buy a stock, okay, you automatically are losing money. You're losing your commission and you're losing your spread. And that's the spread is the most expensive part of the trade. Now, what are we talking about when it comes to spread? Well, look at this example we have right here. We're looking at a stock symbol. Right here, let me just get my little pointer out here. Okay. Now, when you look over here, to buy this stock, ladies and gentlemen, and I'm going to try to basic here. I know some of you here are probably trading for a while, and maybe some advanced traders, and trust me, I got my tricks in my pocket I could, to resolve and answer some questions on your end. But on this situation, let's look at this. To buy shares in the market, you have to buy it from a seller. Where the seller is located? On the ask. And here we're looking at a level 2 screen. And what you could see here on the right-hand side, the people looking to sell the stock at $19.66, those are people that you're willing to buy the stock. Now, if you look where it says quantity, QTY, that is the amount of shares that people are looking to sell. Now, if you're looking to buy 100 shares, yes, I don't think you have a problem getting it at 1966. But if you're looking to buy 1,000, maybe 2,000 shares, well, guess what? Everything there is multiplied by 100. And by the time you start executing all these sellers, that 1966 is not going to be there, because there's only 200, 100, another 100 at 1969, 800 at 1976. All of a sudden, start doing the math. On 1,000 shares, you will technically run up that stock 10 cents. That's just to buy it. Now, let's say you're wrong. Well, to get out of the position, you have to sell it to the buyers. Where the buyer's located? On the bid. Well, who's there on the bid? Are you going to get it at 1957? No, there's only 100 shares. And when you look over here on the bid side, what do you have there? 800? So you go from 57 to 56. Think about it. Now do the math. 1956 to 1976, you're talking almost 20 cents. 20 cents on 1,000 shares is $200. $200 over the course of the year is $50,000 a year. Some of you wish you could make $50,000. Now, getting back to the discipline part, the reason why I'm really emphasizing this, and I know some of you probably know exactly what I'm talking about. Some of you advanced traders be like, oh, I know Fausto's talking about. Yes, but did you ever think that going into this trade and going to another stock that another move is costing you almost $200? Some of you wish you could make $200. Here you're already losing $200. So my point is, whenever I trade a stock, I'm always looking how much money I'm losing, because I did not make any money until I sell the stock. Even when you're profitable, you didn't make anything till you sell it. It's funny. You know, I always hear, I live here in New York, and I know my typical stockbrokers, and and I always hear some of their funny lines that they tell their clients when their clients are losing money. They're like, "Hey, you didn't sell anything. You didn't lose any money in that stock position. We still own it. When you lose is when you sell it. That's when you lost." Yeah, right. Listen, your account balance, when you open up your checking account, when you say you have $50,000 in your account and your checking account says $30,000, I don't care what people say on the stock, you're down $20,000. All right. So the point that I'm really trying to stress is, before you ever place a trade, you need to know what your risk is. And this is now, for some of you, might look at this situation and say, wow, that's a little too much for my cup of tea. I wasn't planning on risking $200 on a position. So what you need to understand is there are several thousand stocks you could trade in the market. Why do you have to look at this one? So if you have an excitement to trade a specific stock, maybe it's one of your favorite stocks, maybe this will help explain why you're losing. Maybe, and there's so many stocks out there to trade. And what's great about the Lightspeed product is that it goes through the top 20 list. It tells you what's hot. It tells you what's not. You could see what percentage gainers and losers. Don't go out there and trade something because you got a stock tip on it or whatever it is, because, once again, you didn't make any money until you sell it. Now, moving on, ladies and gentlemen, the thing that I like also about the Lightspeed product, which I've seen a lot of people make mistakes on that they don't use, which totally blows my mind. I just can't understand why people don't use this, is Lightspeed probably has one of the nicest level 3, which is called Total View, windows on an execution system. Now, let's talk about Total View. I don't know if some of you all know what it is, but Total View is the list of exchanges where you'll see a lot of the block orders are. I mean, some of you talk about these hidden orders, and you can't see it on level 2, but you can see it on Total View. Now, I like to use this the Lightspeed product one, because you can look and see ARCA, you could see NASDAQ, you could see Boston, you could see all the exchanges if you want. Now, for all of us, you have to remember how do stocks go up and down in the stock market, supply and demand, something that you learn in the 3rd grade. Well, the beauty about Total View is that's going to show you where majority of the supply and demand is, which a lot of people don't look at. So when you go out there and you're trading, another part of, besides the discipline part, is you got to have the right tools and the right windows. Now, I do education for so many platforms out there, in this industry. And one thing I can tell you, the problem that I found with a lot of the execution systems out there is that they like to show off their platform, all these great features. Now, the Lightspeed product is very, very simple. Doesn't have all this, what I call noise, all these great features. Because you know what? There's only so much you could fit on your screen. And, and if you have 2 screens, that's great. But some of these things, you need 7 screens to open up what you got going on. And then now technical analysis starts to become paralysis. But the one thing I always notice that most people don't have on their system, which I can't understand how that's even possible, they don't have their Total View up. And, I do a lot of education. I'm actually in talks to do a big presentation for NASDAQ They're actually going to be at the Traders Expo next week. I probably recommend you ever to listen if you ever get the opportunity to listen to exchanges when they talk about, how the market works and so on, you'll definitely get educated on that. Listen, I do it. Why can't you? You think I don't go out there and learn something new every day? I want to know what's going on with today's technology. Technology is constantly changing. I'm a great trader, but I have to adapt with technology. And the one thing that they're pushing more and more and more is the total view. So for everybody here, just to let you know, tomorrow morning, I'm going to invite all of you at 10 o'clock Eastern Standard Time, and I'm going to be doing live trading on the Lightspeed product, which, by the way, I found recently that there are not too many schools out there that do that. I feel like, listen, first of all, I'm also a 9-time champion at the Traders Challenges. And the reason why I do that is I love to compete. I love to show people, like, listen, if you're a good trader, go out there and let's put your money where your mouth is. All right? So these are some of the things that you need to see. And tomorrow, at the end of today's presentation, I'm going to show you how to go there. And for the ones that are reviewing this and in recording, don't worry about it because we do it every week. And I'll give you the link where you can register for it for future classes. Now, how do we use this total view platform? Well, I think everybody here, the first thing everybody likes to learn is charts. Okay? Now, to me, charts are very easy, or they could be very, very complicated. Now, the charts could be, to me, you have to understand, they're a lagging indicator. What makes the way, and everyone has this whole philosophy with the candlesticks and the MACDs and the Fibonacci. By the time you put all these stupid things together, the stock already took off on you. So one thing you have to realize, and something that I teach, is keep things very, very simple. But the power of the total view, let me explain to you how it works. If you look right here on the bottom, ladies and gentlemen, if you look at all these bars, right around the $2.37, you could see that that is a major resistance levels. A support level. If you look right around the $2.43, you could see how that is resistance levels. Now, when you look at the total view on the right, look right down where it says $2.37. You could see how you have triple digits, 26,000, 9,000, 14,000, 17,000. You could see all these big block orders, 99,000. But then when you look at the ask, you could see that there's not that many big sellers, 5,000, 8,000, and so on. Now, the thing that you have to understand when it comes to trading, I think I noticed that there's a lot of fear of people seeing these numbers that they get scared. They look at it and they don't know how to interpret it. So I'm going to talk about it tomorrow and how to prepare so you're not scared or feared from that. But that's something that you want to look at. So it's a great tool to have. So when you guys get a chance, I would definitely turn it on. Now, a couple of things I wanted to cover here. Timing during the day, and I also want to talk about the greed factor that comes along with trading. The fear, I would say, you have to understand there are certain times during the day where you make most of your money in the market. Now, depending if you're a day trader or if you're a swing trader. Day traders make most of their money the first hour and the last hour. That's it. I literally, if you are looking to trade unless you're looking to do this as a full-time basis, trading, I can tell you this is not a full-time job. It's a part-time job. And I think what ends up happening is that when I teach my classes specifically, I only trade the most volatile time, the first hour. Now, what ends up happening is people start getting greedy. Because if you trade and you're an active trader, I don't know everybody here what kind of trader or when you trade, but if you are a professional trader, you've been trading for a while, maybe you listen to other people, you'll notice that most of the action kicks in early in the morning because you have all these orders from the day before. A lot of these orders can't get executed until 9:30 of Eastern Standard Time, and they come in. So you'll see a lot of these spikes of these stocks make these big rallies. Now, what happens is you'll notice that you'll make most of your money in your early mornings and in the late afternoons because the market's closing. Traders want to close out of their positions before the market closes. But what happens is people get greedy. And what I mean by greedy is they go out there and they see how easy to make that much money that now they're like, oh, I want to try that again. I want to try that again. I want to try that again. And then what happens as every minute goes by and more you go into the trading, the less volatile the market gets. And the less volatile the market gets, the less money you make on that position. Remember, without volatility, you can't make money in this market. Now, how do people get greedy? Well, honestly, I don't even know where to start, how often how people get greedy, but I'll cover a couple of things on it. Greed is not Gordon Gekko. Greed is not good. Greed is bad, okay? And the reason why greed is bad is that trading is a job. And the thing that you have to understand is that when you go out there and you trade in the market, you have a game plan. Your game plan is to make your day's pay. If you ever talk to any professional traders, one of the things that they talk about, like how we relate to each other, are like, oh, they'll say, oh yeah, that guy, he makes $500,000 a day. He's all day long. Oh, he makes $200 a day all day long. We don't look at it and say, oh, he makes 3% of his money every day. Oh, he makes 20. We don't talk like that because account size is different than everyone else. We look at it as a job, as a day's pay. So the thing is that if you buy 1,000 shares of stock and it moves 50 cents, 50 cents, we see stocks move dollars, 50 cents, that's $500. If it moves 20 cents on 1,000 shares, that's $200. Some of you will be ecstatic. I don't even know so many people that could make $200 a day in today's times with the unemployment that we have. 20 cents. You think it's hard to stock to move 20 cents? We see stocks move dollars a day. But why people get greedy is because they make it so easy and they say, oh, let me try to do that again. And then what ends up happening is that $200 profit that they had ends up becoming a $400 loss. So when it comes to the greed factor, ladies and gentlemen, what I like to do and what I like to teach my students is that you need to train yourself. And this is probably a little quick strategy I'm going to teach you right now, and you probably want to write this down. This is how I kind of teach my students how to control their trading. First of all, tomorrow, if you come and attend my event, and by the way, and some of you are watching this recording, you can come every week. Also, I'll even give you my email, but I have something that's called a day log. And the day log, basically what that does is, what I like to talk about is monitoring your trades. Actually, let me bring it up here really quick. Hold on a second. Let me actually get it for you so you can see what I'm talking about. Lesson plan. Where are we? Oh, there we go. All right, hopefully everybody can see this. Okay, basically the day log is the way you become a better trader is you need to know how to keep track of your trades. In other words, I don't know if anybody here has ever been on a diet. I'm still dieting. Actually, I'm still pregnant with my first kid, and he's already 12. I can't break it off, and I can tell you why. I can't get off the diet. So I know whose fault it is. It's not Weight Watchers. It's me. Okay, but I'm gonna be Weight Watchers for you. I'm gonna be your nutritionist. The way you're gonna learn to be a better trader is you have to write down on your day log the stocks that you traded. You have to put in the amount of shares you traded, the day, the price, the entry, and the notes, basically. Did you make money on it? Why you lost money? You need to train yourself. Was the spread too big? Was it too fast of a stock? There was no dominating market maker. Stock broke major support. Whatever it is, you need to train yourself. And then what I like to teach my students what to do is, once the day is over, what you do is you analyze your trades and see why you made money and why you lost money. And this is what's going to help you become a better trader. Because what happens is if you go out there and you constantly make these mistakes, you're never going to learn. See, to me, losing is a good thing. I know it sounds crazy, but you know what? If you lose money and know why you lost money, you're not going to do that again. And you know what? Making money could be a bad thing. Why? Because if you don't know why you made money in that stock, other than say, ooh, I'm lucky. Listen, luck only lasts so far. But being lucky, going out there and seeing and buying why you made money is what's going to make you a better trader, to do that again. And the only way you're going to be able to monetize that is taking a day log of what you're doing. Till today, I still go out there. When I trade, I write down my day log, and I put it in a binder, and I always look at the end of the month how I did. Did I do good this week? Did I do bad this month? And it's amazing, but you'll notice what days you'll do better, what days you do worse, and this is just going to help you with your time management, because there's only so many hours in a day to trade. And there's only so many hours in the market hours that you'll make most of your money and lose most of your money. And as you start graphing yourself, hey, if you want to watch on a chart, why can't you chart yourself? And you'll be absolutely amazed that 80% of your profits are going to be made when you're supposed to trade, which works best for you. And that's a lot of the discipline. Now, I'll tell you a little horror story about me. Listen, I learned some, I know some of you probably have your horror stories, but I could tell you some of my horror stories, as in not being disciplined and getting greedy. One of them, I'll tell you, I don't know if any of you guys remember, one of my biggest lessons I've learned of a loss, and I've done my share of losses, and believe me, those losses were probably the best things ever happened to me, because if I didn't learn and was able to control it, I probably wouldn't be standing here today talking to you. But I traded a stock a long time ago, several years ago, called Netscape. I'll never forget it, because it was a day that, it was a great summer day, and I traded the morning. I traded off the top 20 list. I like to trade off the top 20 list because I like to trade stocks that have action and are moving. And I went out there and I traded the stock and off the top 20 list, and I did very well in the position. I made like $1,500 in the position in 15 minutes. So I live here in Long Island. I live on the water, and I had a boat, and I called my friends up. I says, hey, let's go do some shark fishing today. I had a good day and don't need to trade anymore. So I walk out the door, and as I'm walking out the door, I watch the TV, and all of a sudden I hear Netscape was halted, and it was at $60, and it opened up at like $40, so it was down like $20. So I'm thinking like, well, maybe I'll get a bounce in the stock. I said, here, maybe it's another opportunity. Now, you have to understand something. Back then, my daily goal was to make $1,000 a day. I already surpassed that by 500. So I says, now I got greedy, and I says, let me go out there and make more. So what I did was, I went out there, sat down, did the trade, boom. Within a blink of an eye, I lost $750 because the stock was, number one, it was way too volatile, and it was all over the place, which, by the way, is something you'll see me when I trade live in the market. I'll show you the difference from some crazy stocks that are very, very volatile and a lot of stocks that are controllable. Well, I was really ticked off, and I really wanted my $750 back, and then I started trading. Now, granted, I have friends of mine waiting for me to go fishing, and they're calling me up. Meanwhile, now I'm stuck in this position. I'm trying to make my money back, and, whatever. Make a long story short, I didn't go fishing, and I was there trading all day. Now, that day, I traded from making one trade and being up $1,500. I end up trading and being down over $5,600 that day. Not only did I lose $5,600, I lost the $1,500 I was already up, so it was really close to $7,000. Plus, you thought you paying high ticket charges, shopping around? Back then, I was paying $20 a trade, $40 in and out, 20 in, 20 out. So on top of the 150 trades I did, that was tap on another $3,000. So that day I lost almost $10,000 from being a $1,500 profit. And my mentors watched me, and they said, Fausto, you're going to blow yourself up. You're going to do it. You're going to blow yourself up. So I totally broke all my discipline. And let me tell you something. If it wasn't for the 4 o'clock bell, I would have still been there trading with bloodshot eyes because I wanted my money back, and I was committed to win. Listen, ladies and gentlemen, Lightspeed is not Caesar's Palace. They don't make money on your losers, okay? They want to keep you for a client forever. That's why they're here. That's why we offer you these free educational courses for you guys to learn. That's why they want you to take educational courses. They want to keep you as a client forever. But if you start crossing that line and doing stuff like what I did in the past, and I know some of you probably here and probably been there, done it, maybe worse, I don't know. I mean, I've seen some crazy stuff. I've been around, and I see some traders make millions, and I see them lose more than millions, you know, trading way over than they can afford. You don't want to be in that situation. So when it comes to trading, you got to learn how to control yourself and knowing when to turn the button off. Now, another thing that I would recommend is stop order losses. I know some of you guys maybe are swing traders, you know, or if you're a day trader, obviously, and you're disciplined enough, obviously you should be standing there and be disciplined enough to hit the button to get out. But I've seen traders out there go out there, and they'll put stop order losses. So another thing I recommend, which is great about the platform, is put a stop order loss. If you're not going to be there, don't lose more than you can afford to lose. If you're looking to make $200 a day, put a stop order loss at $200. Don't go out there and do that. Don't go out there and trade and get yourself in trouble. Take that stop order loss out there. It's okay. And let me tell you, if it goes there, it's probably the best thing that ever happened to you. Because if you sit there and you let things ride against you, now a day trade could be a bad swing trade. I mean, I got horror stories I can tell you. Another discipline thing that happened, and this is something that happened to me also, something very, very fortunate, and I was very lucky. Back in I was trading a stock called Oxford Health. I don't know if you guys remember the HMOs, but back then when we had our previous President Clinton, his wife changed all our health care here in the United States, and it made all the HMOs run. Well, I remember back then when I was trading, there was a stock called Oxford Health, and it was at $78, and it had 1,000 shares. Now, I held the stock all day, and I was losing $500 in the position. And back then, I was trading in a trading office with about 200-300 traders. I had a friend of mine that held that stock, and he was losing about $1,500. Now, he wasn't disciplined enough because his goal was to make and lose $500 a day. Well, he just lost 3 times more than he could afford. So he didn't want to take a loss, so what he does is he held it overnight. Now, ladies and gentlemen, one of the biggest cardinal rules you never, ever do not, and I repeat, do not hold overnights. And the reason why it doesn't work is because the reason why people hold overnights is they don't want to take losses. Here's a friend of mine, held it overnight, and it's sad, but it's very, very funny. He holds the position overnight. I sell it. I says, I'm not holding $78,000 overnight. Are you crazy? I'm like, so I took my $500 loss. Well, the stock was pretty hot the last couple of days, so he felt he didn't want to take a loss. He thought it was going to come back the next morning, so he held it overnight. So what he ends up doing, comes in the next morning, worst news I've ever seen back then. Accounting fraud, insider trading, you said it, it was all over the stock position. The stock opens up, ladies and gentlemen, at $25 a share. Lost $50,000 overnight. And the funny part is, this is where it gets funny. He comes into the trading room first thing in the morning and didn't even know it was down 50 points. He comes in the computer, he sits down, he looks at me, turns on his computer and says, hey, Fausto, what happened to Oxford Health? Was there a 3-for-1 stock split last night? I'm like, no, Bill, there's no stock split. That thing's down 50 points. I tell you, I saw fire in his eyes. He wanted to kill me. He's like, "Are you serious, Fausto? That's not funny." He goes, "What do I do?" I says, I'm like, "Joe, didn't you not see the news? They got busted for accounting fraud inside of trading." You know, and some of you here, listen, you've been around the block if you've been here for a while, and to some of you that are just starting out, guess what? You'll see some of them time to time. Nortel, Lehman Brothers, Bear Stearns, some of the blue chip companies you probably never think of, AIG, all of them. Well, anyway, let me tell you about the next Carlin mistake, which he did, which you do not want to do. He did something that's called averaging down. Now, I don't know if anybody knows what averaging down means, but went out there, took the stock, averaged down. He bought more. Basically, he bought more at 20, so he had an average cost that from 70 to 25, and the average cost like $35. Well, that's a big sucker bet. Don't ever do that too also. Anyway, that stock that day went from 25 to 20 down to 6. He lost everything. So listen, I'm a type of trader, and I like to teach my students that trading is one of the best jobs in the world. You are your own boss. You can come and go whenever you please. But you need to know how to control and be disciplined enough to go out there and do this. You got to know when to take losses, and you need to know when to take profits. And I think that's one of the major things that most of us need to understand. Let me just X out of this. Let me just change my slide here for a second. Now, obviously, going back into trading, another thing that I find that prevents people from being disciplined is they get too technical. They go out there and they start reading all these books. They start reading all these indicators, start listening to a million different people. I have a method, it's called the KISS method. Keep it super simple. If you want to be, if you want to be disciplined enough, don't let other things tell you when to get in, when to get out. Follow your instinct. If you know the thing's going down, take your loss. It's only going to get worse. Let me give you an example, okay? I like to teach my students something that's called the building method. The building method, it goes like this. You're in a building, right? You got a floor, you got a ceiling, okay? If you break through a floor, you break through that floor, what is going to happen? You're going to go to the next floor. That floor is called support. That's the next support level. Like it or not, that support level could be 2 feet away, or that next floor could be 50 feet away. And we all know at 50 feet, you have a very slim chance of living. All right, maybe a 2 feet drop. 50 feet could be a major problem, even 10 feet. But you could see the support level. The beauty about having a direct access system like the Lightspeed platform is you could hit the button and hit the parachute and take the loss. Because guess what? You could hope all you want, which is one of the ugliest words and vocabulary words in trading. It's called hope. You could hope all you want, but that stock is going down to that next floor with you or without you. So you can hit the parachute and get out now or test that floor. It's your choice. Once again, that is the greed part of it, because you don't want to take a loss. Is it greed? Yes, I call it greedy. Because sometimes you want to make more and you're not happy with it, and you take, or it's the opposite of losing. You're losing too much, so you don't want to take that loss. Trust me, and who's to say it won't break that next support level? So try to keep things a little simple with the KISS method. Try not to keep things too complicated, and because understand, some of the most important tools that I kind of teach in my trading methods is, and remember, I've learned from some of the best traders on Wall Street. I was born and raised in New York. This is the financial capital of the world. I was fortunate to work next to some of the best traders on Wall Street, and some of the things I teach you is keeping things a lot more simple. And I've always found that some people starting out in this industry, they start taking it to way over the next level, and they make things more complicated than what it really is. Now, like I mentioned earlier, finding stocks, and one thing that's great about the Lightspeed product is that they have something that's called the raisers and fallers. That's a great tool because that's going to show you all the percentage gainers and losers. And that's what I like to look at. I like to filter it that way. I don't know if people have the fear of trading these stocks, but some people says, oh, I don't trade stocks in there because they're penny stocks. First of all, let me just clarify something. A penny stock trades on the pink sheets and the bulletin board. I don't trade penny stocks. Just because a stock is in single digits doesn't mean it's a penny stock. I know stocks in double digits that are actually penny stocks that are in the $20s and $30 price range. Why? Because they trade on the bulletin board, the pink sheets. There's nothing wrong about trading stocks in here. Because think about it. Why are you here? To make money. That's only the reason. Do you really care what the company does, or do you want to make money? And I think that's where the fear comes in. People have feared to look where they're supposed to look because for several reasons. Maybe somebody didn't teach you where to look, and maybe you're just so used to trading something that you're familiar with a brand name. Now, unless you're trading a certain style, maybe you're trading rebate trading, maybe you're trading, velocity trade, whatever it may be, there are different ways of trading. But don't be afraid, but you should know where to look to trade in these markets. And that's one of the most important places. For example, Netflix. Okay, let's throw on Netflix, a $300 stock. I know everybody knows Netflix. This stock fears me. When people tell me they're trading Netflix, I'm like, hello, why are you trading Netflix? And I'll tell you why. If my goal is to make $50,000 a year salary, I have to make $200, that's 20 cents on 1,000 shares. Why am I going to go out there and trade a $300 stock? You know what the difference between this stock and a $10 stock? If either one of them move 20 cents, you make the same 200. This one still go down 300 more points. And if you don't believe me, where did it go? All the way down to 71. Think about the people that own it at 300, and there are people that own it at 300. A lot of people own it at 300. Why? Because, I don't trade in expensive stocks. I only trade it because this is a real company. All right. So I guess Bank of America is not a real company when it was at $5, ladies and gentlemen. It's all about risk to reward. Like, look at this stock, Royal. Here you have the stock that went from $4, right here you can see in the intraday chart, the top left, went to $5.50. Stock went up $1 in a matter of 30 minutes. What's wrong with that? I don't care what Royal does. I mean, realistically, do you really care what the company does, or are you here to make money? There's nothing to be feared about trading stocks like this. CMED, never heard of it, but it was pretty hot one day, right at the open. You could see the pre-market trading. Stock had some really good action. That was in here in the shaded area in the intraday chart. And you could see right in the top left-hand corner, stock went from $4.70 all the way to $4.90, $4.97, almost $5 a share. Not bad for less than an hour's trading day. I'll take 30, 40 cents. Less risk, not a lot of money, same reward I'm looking for. JetBlue, same thing. Is that a penny stock? No. Now you have to understand, whatever, you got to know what your profit goals are. Daily, monthly, be realistic. Something I highly stress in all my classes that I teach my students. Everybody here has different pockets. How much money you want to make. Some of you want to make $1,000. Some need to make $200. Well, I don't even look at it that way. Some of you want to make a $50,000 a year salary. I think that's a pretty good goal for some of us that are unemployed, obviously. Some have to make $100,000. To make $100,000 a year in trading the market, you've got to buy 1,000 shares of stock. It has to move 40 cents. Do you think it's hard to find stocks move 40 cents in the market? You see stocks move dollars. 40 cents, you got it all day. Actually, you could trade it twice, 20 cents a piece. Or you could trade a stock 4 times at 10 cents a piece. Some of you here don't realize the technology that you have in today's times. Use it. You're going from public transportation to driving your own car with the Lightspeed product. It doesn't take that much money to be successful at this. Have a reality check, like the last one. Whatever money you make in the market, you can lose just as quickly. You need to know when to take your profits and walk away. Now, like I said, you're going to get greedy sometimes. You're going to try to, let me try to do that again. Let me try. Listen, you're going to make that mistake, and it's okay. As long as you put it in the day log and you start graphing yourself and start realizing where you're making your money and losing your money, eventually you're going to come to reality and says, you know what, I made my day's pay and that's it. There's no reason to trade anymore. So once again, give yourself a reality check when it comes to that. Now, ladies and gentlemen, for some of you who don't know this, Cyber Trading University was ranked #1 school 6 years in a row. I've been written up in some of the top magazines, actually in the front cover of Active Trader magazine, did the same thing for us. Something that I'm going to talk about tomorrow is if you want to be feared about something, I didn't even talk about market maker traps. It's called reverse psychology. I show you how they go out there and they'll put fake bids on the bid and sell it on the offer. I mean, ask yourself a question. How many times have you bought a stock and as soon as you bought it, the thing goes up? Not too many, but how many have you sold stock and as soon as you sold it, it goes up? Happens all the time. How many of you sold? How many of you bought stock and as soon as you bought it, the thing went down? Why is it happening? Something I'll talk about tomorrow in the real market conditions and show you. Obviously, the market's closed today. Now, for everybody here, if anyone's interested, tomorrow I'm going to do live trading on the Lightspeed product. It's going to be on February 10th at 10 a.m. Eastern Standard Time. I can show you exactly where to register for it. I'm also, for some of you that are reviewing this recording, I'm also doing one on the 16th. And you could always go to this link right in the bottom, and you can register it. Like I said, I do events every single week, and I'll show you exactly what it's like to be in the real market conditions and trade it, because obviously the market's closed right now. There's not a lot I could do. So right on our home page, ladies and gentlemen, you can see right here in the quick links, it says free live trading webinar. Just click on that link. We'll get you registered for tomorrow, and you can watch me trade the morning open on the Lightspeed product. Now, what I like to do, ladies and gentlemen, here's my email address. If anyone has any personal questions, I answer all my emails. You'll be shocked. Just please don't spam me. But if you have any questions that you want to ask me, trading questions, strategies, I'll be happy to answer any questions you might have. All right? And not only that, but if anyone's interested in my layout of my Lightspeed product, I think that's another mistake a lot of people do. They don't have a really comfortable understanding layout. So if you guys need a layout, feel free to email me and I'll get it to you. So what I like to do, ladies and gentlemen, in the meantime right now, if anybody has any questions, please put it in the chat room. I'll be happy to answer them. Anything specific about the fear of trading and the greed part of it, or anything about the Lightspeed product as in that has to do with training, I'll be happy to answer it. So, Mike, does anybody have any questions? No, great, Fausto. So we actually did a pretty good job of handling all the questions throughout the webinar. Oh, we got one more popping in here. It's a question that comes up a lot. So basically, how do you decide which stocks to trade? And I think you kind of hinted at that using the different scanners that we offer, but maybe you can just quickly recap. Absolutely. I'm actually going to be doing a demonstration on that tomorrow because the market's closed. But what I like to do is on the Lightspeed product, I go through the top 20 list. And I like to have it set by the percentage gainers and losers. Once again, I am here to make money, okay? I'm not here to trade a stock because I said, hey, look at me, I traded Apple. You know, that doesn't make me money, okay? That costs me money because I have to risk $475,000 to trade that stock to buy 1,000 shares. But there are other stocks out there that have volatility, less risk, same amount of reward. So I'll go through my top 20 list on a Lightspeed product, and what I'll do is, and this is very important because there's a lot of stocks in this market, like I talked about earlier, that are not tradable, meaning they have big spreads, they're too volatile. So you have to know how to scan which one is going to give you a good spread, good volatility, good movement, and it's comfortable to comprehend the trend if it's going up or going down without being panicked. Because some of these stocks can move 5, 10 cents a second, and you know it's like playing $100 a second. I mean, or a minute, let's just say. You see some of these bars. I don't know if you guys are interested in playing like that, but some people would be happy to make $100 a day. Could you imagine playing $100 a minute? I don't think so. And some of those stocks, you got to be careful, but I'll scan through that. Okay, great answer. Next question is, how do you decide when to take a profit? Is it based on resistance levels, or are you using some other indicators? What tells you when to get out? That's an excellent question. Two things. Number one, I look at it if there's something I'm going to talk about tomorrow. If I see a market make a trap on the level 2, meaning seeing because with total view, which I tried to touch upon a little bit today. If I still see buyers on total view bidding for the stock and see more big block orders, I'll hold on to the position, because you see stocks at resistance levels all the time, Mike. And what happens is, with those resistance, you'll think to get out. But if the buyers are still there bidding it, and the market makers on level 2 are still on the bid side, it's going to break out. So I look at those two things. And also when the stock hits the resistance levels, how do you know when to get out? Well, I'm going to look at the total view in level 2. I'm going to see if the dominated market makers are there, any brand new market makers, or see big block orders out there on the level 2 and total view. Because once again, the way these charts work is due to supply and demand, work through volume. Where does that volume come from? From those two features of the total view and level 2.
Okay, and then we're getting some questions about getting total view on Lightspeed. So we actually included for everyone who subscribes to level 2 market data, which is essentially anyone trading on Lightspeed. So all you need to do is, if you right-click in your level 2 window and go to the settings menu, there's an option there as to how many levels of every participant you want to incorporate into your quote. So you can view multiple levels of NASDAQ, ARCA, EDGX, EDGE, every participant. And of course, you can also open up a separate books window, which is just the ECN book level depth. And again, no additional charge for that. And let me see if there are any other questions coming in. I think that's it, Fausto. So I think we can cut it off here. I appreciate you doing another great presentation for us. And of course, I invite everyone who's in the audience that's not a client of Lightspeed yet, check out our products. You can go to the Lightspeed website. On the home page, there's a requested demo link. One of our sales guys can help you configure a layout, show you all the features and functionality, and show you all the advantages that Lightspeed can offer. So with that, thank you to our audience, and Fausto, thank you to you, of course, and have a great afternoon, everyone.
Mike, thank you very much. Everyone else, thank you. Thank you, Lightspeed, and hopefully look forward to seeing everybody tomorrow. Have a great day, everybody.